Okay, thank you. This is a safe space, so if you have questions, I'm going to ask for shout outs, your participation. But there's a lot of me talking, so I hope that you can. This isn't whether it's too high or too low. I just don't know. I am in this day to day, and so what I'm going to give to you is trying to hit a happy medium. The purpose of what I'm trying to do today is really talk to you about how to look kind of outside of your functional remit and how to look at the business. And so when we start to look at the business, I have to first orient you about what that means. So I'm going to give you some trends. I am going to give you some perspectives, and by no means is anything guidance. So there you go. However, what is really important, and a lot of you, I'm sure, have board members and are aware of your board members. I'd love to know how many of you have mostly investors on your boards. Over 50%. Okay. You probably also have some operators on there, but probably the loud ones are the investors, right? Okay. Well, within that, I'd love to hear from you what you think investors say versus operators about business health. Like, what kind of language do they use to shout it out? Okay. Forecast. Multiples. Magic number. Yep. CAC. Okay. Fantastic. Yeah. So they say all those things. And that kind of leads you into why we have people like me in some of the investor firms. So I am by trade an operator. As Amelia had mentioned, I'm 20 plus years in software and analytics, sales, and product management, go to market, all things. So there are a bunch of us that are on the deal team, on the investor team, and there are a bunch of us in advisory. So we were all ex-operators, and we kind of bridge the gap. So we do a lot of translation. We kind of communicate to our investors about operating progress, operating issues in their language, and we hear what is important to them, and then we essentially help influence prioritization and imperatives for the business. So that's kind of what our role is in Insight. In addition to, we do a ton of advisory, we do a lot of consults, we help diagnose a lot for our portfolio companies. And I give you that because I'm going to start giving you some trends. And one of the things that I did recently was I stood up at an SKO for a company and really kind of tried to demystify what investors do. Not only that, demystify the board members. And so hopefully this kind of translates a little bit for this crowd as well. So to give you a little bit background on Insight Partners, we are a firm based out of New York, but it's about over 90 billion of capital deployed across, I think the number is now 540 companies, mostly in SaaS B2B, and we have a diversity. So we're both venture as well as PE. We have seed series A, 0 to 10 million, which is our early stage, 10 million to 100, our growth stage, and late stage, which we all know in the real world is still a startup, 100 over, right? So we do have different segments, and so the trends I will show you actually have them cohorted a bit. So you can feel free to ask questions. So the premier metric for a lot of us in the investor world is Rule of 40. And when we talk about Rule of 40, I'm just going to deconstruct this a little bit and how it means, what it means for you in operating and how your operating metrics actually feed into that. In this case, we have a report that recent across our portfolio, cohorted by different growth segments, about what's happening in the Rule of 40. It is a very simple metric. It is essentially year-over-year growth rate plus your EBITDA margin, right? And that will give you 40. It's actually a really interesting metric because it gives you an understanding of what you're going to trade off in growth for margin and what you're going to trade off in profit for investment into growth. So this is where companies and investors can really try to make some form of modeling or educated guess about the investment of taking away a little bit of capital in order to go ahead and invest in new market or new product areas. But the trend is really showing that in over this time, this past year, it's been pretty flat, but not bad. Like there is definitely incline going on with Rule of 40 across the portfolio. So why? Why is that? In the age where we have really moved away from growth at any cost to please don't burn so much capital, this is essentially what we're seeing, right? So there's still some growth, but it's just, there is some headwinds, but there's still growth. The big ones are still operating at like a 20 to 30% growth year over year. And the hyper growth companies are still over that 50 line, right? So what we do see though, is it's actually efficiency. Efficiency is really the stabilizing force here around Rule of 40. And so the companies got the message. They started being really responsible about their growth. They were hiring slower and they were enforcing their budget. So this has been really observable around their efficiency and how it actually has correlated to their overall improvement in Rule of 40. Free cash flow is just another, a bigger view of that input to Rule of 40. So AR to FT is just essentially a component, and I'll break it out for you a little bit. But I do want you to take a look at the free cash flow and look specifically at the black and the orange. So black are the hyper growth at 0 to 10, 10 to 20 is the orange. And what they've done is actually they've really tried to make strides to get more positive in their free cash flow. And there's a direct correlation. I'm bringing this back to the Rule of 40 so you can actually see the slope of Rule of 40 is really pitched up because of their improvements in free cash flow, even though they were kind of sustaining some of their growth. So this is something that we saw trending. It's not rocket science. It's pretty simple. It's all, it's an addition calculation. So, however, what's important to know is really about what is the impact and why do we look at Rule of 40? Rule of 40 actually impacts valuations. So today, what we have is that for every 10 points on the Rule of 40, you get 2x multiplier. So to make it really simple, if you have stock grants of $10,000, you're sitting at a 25, Rule of 25, you actually contribute to the improvement of your performance, whether that's through growth or through efficiency. You're all of a sudden at 42. That means now your 10,000 is 40,000 in grants. Okay? All right, so this is essentially when we start to look at all those SaaS metrics that come out, it's essentially broken into kind of how it attributes to growth and then how it attributes to efficiency. So all those numbers that you're talking about with regards to GRR, NRR, those actually factor right into year-over-year compounding ARR growth. And then when we start talking about cost per lead or the importance of getting more out of the sales and marketing expense, that goes into OpEx, and OpEx goes into your efficiency with regards to free cash flow. So these are the two things. So all your contributions of what you do tie into one of these components that actually factor into the rule of. Any questions here before I move on? Okay. I'm going to actually now start talking about, that's all historical. That's all before AI and what AI has been doing. So we're going to talk a little bit now about the impact of AI on rule of. And the question is, what will the new standard be? Because it's not going to be 40. I don't know if if you're in circles that talk about this. Have you heard anything? Okay, there's a ton of speculation about how big this decile is going to be. I've heard a lot, and they're all speculation. I've heard 50, I've heard 60, I've heard 70. So no one really knows. And why is that? Well, if we look at the components and, oh, sorry, Amelia, this is my older presentation. Sorry, it's okay, it's all right. Yeah, so yeah, that's okay. Well, I'll kind of talk over it, but do you mind, actually? Sorry about that. I gave her so many new versions. This is so terrible. So if we take a look at the components, there's really two. So you can look at growth being commercialization. That's what I'm going to touch on today. And efficiency being productivity. That's also something that you all have been talking about all afternoon, and kind of what we're seeing as far as observable trends. Nothing new, really just validating what you're seeing already. But I think the commercialization thing is going to be interesting for you. So when we start to look at commercialization, when we look at these two factors, growth and efficiency, playing into the Rule of 40, and what is the magnitude that's going to move it up? It's not going to be commercialization from the get-go. And the reason why is it's just too uncertain right now. There were a lot of things touched on here, especially around cost, that we don't know yet. And so what we've done is really kind of there's some consultants and some other things who've really started to factor in, well, maybe some of that impact to rule of is going to be more in the productivity side. And so we can talk a little bit about some of those things. Sorry, it's okay. Yeah. All right. So first of all, yes.
You're talking about companies whose core product is an AI offering, or if it is AI as a support technology for everything?
Commercialization is more from the lens of those who are doing, actually offering AI at this point. However, if AI is helping them get to market faster or improving things, that's something else. That could be growth, right? On the productivity side, it was really about adoption. Yeah. Okay, so what I'm going to just keep going, and then once we get there, okay, great. Here we go. Sorry. Okay, sorry about that. Amelia, that's my fault. Okay. I'm surrounded by really smart people, not only in this room, but at my work as well. And so I take absolutely no credit for anything, any of the IP coming out of my mouth about commercialization. I have a very smart colleague by the name of Ethan De Silva who really helped me through this, as well as some other folks on the investor side. Ethan created this graphic, I thought, product line. Or is this a feature that really you need to help differentiate yourself in the market, because it's either it's just getting very competitive, or there's some other forces that are looking at replacement. So he started there first, and that became a super interesting conversation, because you really have to know where you are in the market and make some smart bets about where you want to be in order to create that product sequence and how you're going to incorporate AI and position it. That starts your commercialization planning, right? So we then went into units, and the unit is interesting because he really brought up the aspect of the customer and how, I don't mean to like rain on anyone's parade, like units, like tokens, are not understandable by the customer. Units about tasks, and I heard someone talk about intercom. We've got intercom in one of our portfolio companies that did it pretty well. They did pretty well there. They are kind of in that holy grail right now of pricing, in the sense that they're pricing by task, right? Per case resolved. So there is this trajectory of value between the task and the outcome, and then all the way to kind of the widget. So there is we're really seeing a lot of volatility and like a lot of experimentation around this. People haven't really figured this out, and so that's why you're seeing buyers opting for try and buy or 1-year licenses, is because they don't really know what the cost is going to be. They don't know what your commercial model is going to be from an AI offering. The other aspect is that the costs of the selected models. So what was really interesting, I found Andrew's talk extremely interesting, because I love this stuff. And what I really kind of understood is there is a true cost in what you actually select in your model. He talked about little models and he talked about big models. And for those who are not technologists, I'm not a technologist, that is really important, because that shapes your entire ability to contain costs. So those who choose bigger models, what happens is they have to start capping like their pricing. So they'll like price by user and then start, but with a reasonable cap on usage, because they got to contain the cost and retain the margin. In addition to that, there's all the one-time costs, like he mentioned about fine-tuning, as well as run-time costs that are new to companies. So because of these costs, it's basically neutralized the impact of any growth commercialization's having with regards to a launch of a new AI feature. That's the way the market, like investors and consultants, are really looking at this, is we don't know what the costs are, and we don't know how you can all contain them and price them the right way, right? But finally, the one thing that stands true and continues to be the feeding the power, the growth engine, is value. So in addition to the aspect that we talked about, even buyers not really understanding what the value is, they want the POVs, they want the try and buys. The vendors of AI solutions also are trying to figure out the value too, right? So the way they're trying to do that is we see actually some of our companies doing a lot of client-funded innovation. So they will really leverage the services to really put in the AI and really work with and partner with their customers so that they can harvest as many of the use cases as possible so that they can harden them. So we're really in that solutioning stage all over again. So for those who've been around for a while, like me, I feel like I'm back in the 1990s, 2000s again. Okay, so sorry. All right, so that is why commercialization is in the growth side is not really playing a factor into the impact on rule of for the initial time. It will change once things start to get more stable. And the reason why it's focused in on productivity and efficiency is all the things that you guys have been talking about. So you're already speaking about, using it for content, using it for emails, using it for repetitive tasks and CS marketing. But what is interesting, and we started to hear it from the last panel, is, and even with Sanjay's conversation about higher value tasks that are actually happening, right? So I will tell you that I'm actually deploying AI with at my team at Insight. And what are we using it for? We're using it on our advisors. So this is the highest level folks. We actually go out and we identify a lot of different content, a lot of different best practices across all the people we diligence and all the people we service on a regular basis. So our sample size is huge. So when we're able to see everything that's going on and we're able to codify best practices, we create them in order to help us in engagement, consulting engagement. We also do it for self-service for our companies. But ultimately, all of this actually goes and is fed, that data is rich. And that is what we're putting our RAG model on, is for contextual referencing for speed. Because I don't know, my calendar is 30-minute increments from 9 a.m. Eastern, and I live on the West Coast, all the way to 5 p.m., right? So 30-minute increments. I have no time to actually do the follow-up with my companies, but the tooling is allowing us to do high-level things, be able to get Ethan's perspective on commercialization in a brand new product launch conversation without me having to schedule any time with him, right? So these are the things that are really interesting. The impact to that is what I'm calling, probably mistakenly calling, capping the scale. Because when I first started at Insight, we were like 200 companies, and we were scaling linearly, our team. 300, 400, we just got incremental headcount. Now what's happening is we have our advisors who are really interested there's burnout. So we have advisors that are going back into operating. They want to go off and do something different, more mission driven. And that's great, but we don't necessarily have to replace the headcount. So that's kind of where the question is it replacing people? No. We just can do a lot more, right, with what we have. And that is what we're seeing for sure, even in higher level or higher value areas. It does beg the question, how are we getting ready for the next stage? Because all of a sudden, we're going to need to start training people at a higher level too, right? So this really touches on what are we doing to apply AI into the backlog of all the operational debt that we have. So the R&D folks have done really well in identifying, oh my gosh, there's all this old code, now I can actually clean up. Tech debt is absolutely something that a lot of our CTOs are addressing with AI all over the place. I'd love to see more of our companies apply AI to the operational, very important, but maybe secondary to kind of core revenue kind of business, right? This includes enablement. It includes community, right? It includes product documentation, but all of this stuff also we need to look at developing actual humans into, as we kind of take away the repetitive tasks, they have to skill up into higher value areas. They need that ability and that enablement in learning and development. So would love to see some effort in the Gen AI stuff to help skill up our teams too. But that was a great story on the Dusty Robotics, so thank you for that. Okay. I'm going to give you a couple use cases. Is that all right?
When you just talked about tech debt and you said a lot of people are already focusing on like modernizing the code and all.
Yeah.
Are you seeing them fall into that as they start thinking about like running a better business with AI or running a better tech shop? Or are they starting with saying, no, I need to modernize my architecture, modernize the legacy code bases I have, and then get to that? Where are you seeing them start on which side of the equation?
I think they're doing both. Yeah. So they're continuing to move forward on their roadmap, and they're able to go faster on that, and then apply some of the capacity to the AI stuff towards their tech debt. Yeah, the old code, right? And then they have stuff like, and this is one of our portfolio companies, you're really using like something like Sonar Cube or something to kind of like check it all, right? So it's kind of paired with Gen AI code check, right? So, and we see this especially when there's a lot of M&A too, is that you have to rationalize some of the code. Yeah. Okay. Okay. All right. So I'm going to give you two use cases, one that was good and one that was not so good. We've been debating a lot about how ready are we for AI to be in sales? And we're taking baby steps along the way. And especially, some of the questions about like, would you experiment early? The whole thing, like I would have experimented early, and I absolutely agree with that. I think in this area, you'll see one company that experiment maybe too early. However, what I'll say is, so this is a named company. They did a case study. That's why I can name them. They actually used another portfolio company's software, and they did it for inbound. Okay, so they fed in really good data, which was all their playbooks, the qualification, ICP, all the things, right? And were able to train the model such that it performed really well. They had a lot of volume coming in inbound. So to actually, you understand the importance of speed to lead, right? So that was really their issue. And to get to speed to lead allowed them to book faster, qualify, and then get more into the pipeline. So this was a good use case, good data, understood the workflow, predefined workflow, and a really pointed use case. Okay, good. All right, so this one, thank you, Amelia. All right, so this is a portfolio company that adopted AI technology a little too early, pointed at not proven yet, pointed to outbound. And so this is one where they also, I think I already heard some of the missteps around it of AI adoption, which is good. So this team didn't have as good of data. It wasn't super predefined. One thing that it did really well was research. So research we need to have within sales and prospecting. And then the other is the tech wasn't ready. So in this case, and we still see it very wobbly in outbound. I'm really glad to hear some of you actually having good results in email and prospecting. Very good. I'd love to hear more. So if you're going to be around after this, please, I'd love to talk to you. Or maybe you want to share why. Actually, let's open up. Why, for those who are doing AI and outbounding, why? Why is it performing well, do you think? Is anyone doing?
I'll say in our experience, we experimented with it. It did not work well. Yeah.
Okay. Did it?
That's personalized. It's good.
Yeah.
Read through the LinkedIn profile, but it's just creepy or awkward.
Yeah.
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 Chat 5.0 is going to focus.
Yeah.
When I heard
Dynamic segmentation has helped. Instead of doing this mass, to entire population. But
the concrete results are still yet to be seen, right? You're still not to see.
Well, thank you for that. I'll share that with my colleagues who are kind of double clicking into this. All right. I gave you 2 examples of small model applications. They're very application specific things. This one is a horizontal. This is on a platform. This is was for support ticket deflection. It was on AWS Bedrock, and they actually had quite a bit of success. And here are the components of why I believe they had success. AWS was embedded in their workflow. So the workflow around support ticket kind of workflow was already in AWS. The data was already in AWS and it was secured. So those aspects, it was just essentially plugging a model on top of that workflow, and it made it work, and they got tremendous results. I will say, I don't know about you guys, but I know for me, as far as implementing an AI solution for users, workflow is everything. And not only workflow, but it gets you to, if you hit it right, and especially for persnickety users like I have, it is really important that you get it right the first time. So understanding that is super important. And in the case of, if you're not forcing people through a workflow, really aligning very tightly to how they work is important. And that is also, when going back to Ethan's conversation, why he's even thinking that some of our commercialization may actually be task oriented, right? So funny that we're talking about high level rule of 40 kind of metrics, and all of a sudden we're into kind of the value is really at the task. So this is where we tie it all together. How can you do that at the task level and build and really bubble up all that value to rule of 40? It starts with the fundamentals. So it's the objective, the strategy you're trying to do, motherhood and apple pie, guys, right? So what are you trying to do, and how are you measuring that achievement to the objectives, right? So these are all mostly post-sales, so hopefully this is helpful. But as you start to understand those KPIs, tie it all the way to the strategy, right? And this will be, I think, uploaded and given to you guys, so you don't have to worry about it. In addition to that, the tasks themselves, as you start to get those objective level and outcome-based measurements, they feed into your SaaS metrics. But the most important thing, and I'm sure you've all understood this, is baseline your performance before you put in the AI, and then try to baseline again before you change another thing. And that's really hard to do because things are moving so fast, but do as best you can. And with that, then you can really start to understand how that is actually impacting your CAC payback, how that's actually impacting your NRR or your GRR because of like onboarding aspects or activation. And ultimately, so what matters to both of these people? Hopefully the same thing. So hopefully what the operators want to do and what the investors want to see is the same, and it is. I'll leave this one last note for you because I could have taken this presentation anyway. I want to talk about the impact of AI on the sales cycle. So what we're really seeing is there's a whole lot of friction going on now that AI is entered into, it's taking all the oxygen out of the room. In addition to it being top of the list of what CTOs want to buy and what businesses want to buy, we're seeing a lot of elongation of sales because of that, and also win rates kind of declining. So how do we get over this? Well, what's interesting is you all have been through the AI journey. You've been talking about it this whole time. You know what's going on in your organization. Well, guess what? It's a great opportunity to build customer empathy. Whatever you're going through is exactly what they're going through. If you're trying to measure value and prove value to business impact, they have to too. If they have an AI council if you have an AI council approving all the things, they do too. So the way that you get all of your experience here is turn it into customer empathy, differentiate yourself in sales engagement, and you will be on a way to growth. And all of a sudden, you're impacting growth. So congratulations to all of you for doing the good work that you're doing. Thank you so much.